Hey traders, welcome to this week's episode of Traders Trade for the week of September 7 to 11. This is your host, Dan Dow. So last week we had the stock split for Apple and Tesla happening, and then we had a big correction in the tech sector. Hope everybody was okay from that. But that was expected, and that's actually healthy for the market. That's what we want to see. We don't want to see one sector running away from its moving averages like that. And the further it runs away, the bigger the crash. So it's good that it actually corrected as soon as it went about 10% from the 50-day moving average, which is what we also saw back in June. And then interestingly, on Friday, news came out that the Nasdaq and the tech sector was actually or possibly being boosted by SoftBank's bullish bets on stocks and options. I'll have further information in the educational content below. On economic reports, job numbers came in at 1.37 million, expected at 1.375 million. In the market, so we had the correction near the end of the week. It fell down to the pre-COVID high back here, and looks like it was able to bounce right back up near the 20-day moving average. The Dow Jones Industrial unfortunately didn't meet the pre-COVID high. It was in this up channel right here, broke above it, but then quickly fell below it, right back into it. The June high was able to act as support and also the up channel. So we're right back in there, right in the middle of it, right at the 20-day EMA. The uptrend is still intact, so that's not too bad. The Dow Jones Transportation, on the other hand, was able to make a new high from the pre-COVID high, but then it quickly fell below it. It did fall down to the 20-day moving average and also this price area for support. And now it's in this new upward wedge that has formed. So the Nasdaq is where the main correction happened. The Nasdaq was in this up channel, broke above it, and then ran up just way too quickly, and it got slammed right back down. It actually touched the 50-day EMA, but then buyers came right in and bought it right back up into the up channel. So the up channel, the bullishness is still intact. That's just so amazing for this sector. Russell 2000 was basing in this area, and unfortunately due to the correction it got pulled down. The good news is that the high in June was able to act as a good price support, so it was able to close around that area and above the 50-day moving average. In summary, everything is neutral to bullish except for the Russell 2000. Slightly neutral to bearish. The shining star this week is actually the Dow Jones Transportation. Okay, so materials, we were in this upward triangle, broke above it, fell down to the new support, and we gotta see how it acts this week. Hopefully the new support will hold and it's going to continue higher. If not, then of course it's going to have to go down. The 20-day EMA is right here, so hopefully that will be the next support. Ooh, energy. So this sector just has no luck, no love. So it's currently in a descending triangle here. It's currently at the area of support. It's a pretty strong area of support because it has been touched a few times. So it needs to decide what it's going to do this week. It needs, this area support needs to hold. Otherwise, this downward trend line is going to take it much further down. Financials is in this triangle. It peaked right above it, but then got pulled right into it. It's still right at the apex. So we're gonna have to see where it wants to break out of, either up or below. I would say probability wise, because the moving average is all here, there's more support. Probability would be on the breakup to the upside. Financials is cautious because rates are low and people don't know what's going to happen now that people can't be evicted, and if they don't have to pay rent or mortgages, that might be bad for financials. Industrials was above the June high, touched it here, bounce off support, and it, due to the correction at the end of last week, got pulled back in, but it looks like it should be fine. The pullback wasn't that strong. It went down to the 20-day moving average, and that held up well. If not, we have the June high acting as the support. So looking for the support to hold and then going back up higher. Technology, similar to the Nasdaq, it was in this up channel, broke above it here, ran up way too quickly, so it got slammed right back down to the 50-day moving average, but buyers came right in and bought it right back up. So it doesn't look too bad. Consumer staples is in this tight up channel. It is above the pre-COVID high. Due to the correction, it got pulled right back down, but was able to stay above the pre-COVID high. So that's good. Let's watch for it to hold. And this tight up channel is still intact at the moment. Consumer discretionaries also in an up channel. It touched the top of the up channel and then got corrected due to the correction last week. And it was able to close still within the up channel, which is good. And that's also where the 20-day moving average is. So let's see if it's gonna continue to march up or if it's gonna break below this up channel. Real estate was consolidating, broke above the triangle. Due to correction, it got pulled down, but it looks like it was able to close above the triangle. So we want to see this support hold and then for it to continue higher. Again, due to the moving averages being congested here, and we have this trend support line, probability is that it's going to break to the upside. Utilities is doing nothing. It's still in this symmetrical triangle, still consolidating. The correction last week didn't really do much to it. It's still at all the moving averages. So at the moment, it's still just moving sideways. It's going to be near the apex of the triangle though. So it's going to have to decide where it wants to go, up or down. Healthcare was in this nice consolidation. It was able to peak above it, but was pulled down due to the correction. Good news was that the pre-COVID high at 105 and the 50-day moving average acted as strong support, so it was able to close above it. We need to see that the support area holds, and this sector just needs to go sideways, really. Communications was really bullish, broke above this triangle, ran away from it, but then got pulled right back down to the new support. And then this new wedge has formed. So we want to see for it to hold the support and then continue up here with this new wedge. In summary, most of the sectors are bullish, and we have utilities, which is just moving sideways. So right now I have it as neutral to bearish. And then energy, just poor energy again, another week, another letdown. It continues to be bearish. On to this week's educational content. First, we have Kathy Woods in the Know video. She is the CEO of ARK Invest. She gave a great market commentary with some great news, so check it out. And then, as I mentioned before about SoftBank's bullish bet, Zero Hedge had a great backstory on it to give you a good background on it. So check it out. The links are in the description. This is a note from JP Morgan to their private clients. This came out last Friday. They're saying that for the stock market, we should believe in the rally and we should expect more gains in the next few years. So they expect a bullish market for the next 3 to 5 years, propped up by the Fed and the low interest rate environment. This is from the same note, talking about some of the risks we have to watch out for. For example, if the Fed stops the QE action, and then we also have the election coming up in November. This is also from the same note, just giving a performance update for their past for the summer. So surprisingly, Asia and the emerging markets has done really well, recovered much quicker than the US. Okay, on to this week's events. Here are the earnings for the week. There are some interesting ones. We have Slack and Lululemon on Tuesday, GameStop and Restoration Hardware on Wednesday. We have Peloton, Chewy, Oracle on Thursday, and then Kroger on Friday. So this week, the market corrected and is consolidating. We gotta watch and see how they react. The stimulus talks looks like they're still stalled, but at this point, it doesn't look like the market is waiting for it. The VIX is still above 30, so there's still volatility and fear in the market. And for economic events on Thursday, we have the ECB meeting. So in conclusion, the market is choppy and possibly moving sideways. That's what we want to see. We don't want to see high run up, because then the higher the run up, the bigger the crash. So it's good that we saw a correction, and now the market is going to digest and then move forward. Just watch for the 50 EMA support for the S&P 500 at 33.18. All right, everybody, happy trading. Stay safe out there.